Have you ever looked at the price of something, a stock, crypto, maybe even a house, and just thought, this makes 0 sense? Well, you're not crazy. For centuries, markets have been hit by these waves of speculative fever that just defy all logic. So we're going to dig into the wild history of these market manias. Because honestly, understanding the patterns of the past might just make us all smarter investors today.
And get this, that quote? It's not from some frustrated day trader. That's Sir Isaac Newton, right after he lost an absolute fortune. We're talking millions in today's money, in a stock market crash. The fact that one of the greatest scientific minds in all of history got completely swept up in the madness, well, it proves a really powerful point. When it comes to markets, psychology can totally trump genius.
So what exactly is this madness? Well, a lot of it boils down to something called the castle in the air theory. The famous economist John Maynard Keynes had a great way of explaining it. He said it's like a beauty contest, where you don't pick the face you personally find the prettiest. No, you pick the one you think everyone else is going to find the prettiest. In investing, that means you buy something not because you think it's actually valuable, but because you're betting that someone else, a bigger fool, maybe, will buy it from you for more down the line. You're not investing in the castle. You're just betting the crowd will keep believing it's there.
And believe me, this is not a new phenomenon. Humans have been building these imaginary castles for centuries. To really get a handle on how this all works, we've got to travel back in time to two of the most absolutely spectacular bubbles in history.
Our first stop is Holland in the 1600s. It all started in 1593, when a professor brought these new, exotic flowers from Turkey to the Netherlands. The Dutch just went wild for them. These flowers were, of course, tulips. And what started as a simple hobby for the wealthy quickly spiraled into a nationwide speculative frenzy.
The speed of this mania was just breathtaking. In the single month of January 1637, the price of some tulip bulbs shot up 20 times over. And we're not just talking about the rich here. People from every walk of life, merchants, servants, sailors, they were all trading their life savings, their homes, their land, all for a handful of flower bulbs, convinced they were on the fast track to getting rich. To really understand just how absurd it all got, listen to this story. A sailor, grabbing what he thinks is an onion for his breakfast, eats it, and gets thrown in jail for months. Why? Because that single onion was a rare tulip bulb worth enough to feed his entire ship's crew for a whole year. It's the perfect example of how completely detached prices became from reality. And then, of course, the bubble burst. Prices crashed, fortunes were wiped out overnight, and those precious bulbs became worth no more than the onions they looked like. Okay, fast forward just a few decades, and we're in England. The madness pops up again, but this time in a different form. A company called the South Sea Company was given a monopoly on trade with South America. Just the promise of future profits sent its stock price through the roof, kicking off this craze where it felt like anyone and everyone was starting a company. And the kinds of companies people were throwing their money at were just incredible. I mean, look at this list. A business for extracting sunlight from cucumbers. A wheel of perpetual motion. But my absolute favorite has to be the last one. A company for an undertaking of great advantage, but nobody to know what it is. The guy who started it raised thousands of pounds in just a few hours, and then skipped town, never to be seen again. Logic had just packed its bags and left. Things got so ridiculous that people actually made satirical playing cards to mock all these scammy companies. This one here is for a machine that was supposed to fire square bullets. And the little verse at the bottom is just a perfect, cynical summary of every bubble. They're only wounded that have shares therein. The joke was the only people who were going to get hurt by this thing were the investors themselves. And here's what it all led to. This chart is the classic signature of a bubble. That massive parabolic rise followed by an absolutely catastrophic collapse. So what popped it? Well, it was the ultimate betrayal. The company's own directors, knowing it was all a house of cards, secretly sold all their shares right at the very top. Once that news got out, the panic was immediate. The castle in the air didn't just fall, it completely evaporated. Now, you might be thinking, okay, that was the 1700s. We're way more sophisticated now, right? Well, let's fast forward to the late 20th century. We've got new technologies, new companies, but as you're about to see, the exact same old human behaviors. This quote just perfectly captures the spirit of the dot-com bubble in the late 90s. The game is pretty simple. Just take any old company, slap a techie-sounding name on it, add a .com to the end, and voila! Watch your valuation soar, whether you had an actual business plan or not. It was all about the hype.
And the names, again, were just as absurd. Fog Dog, Fat Brain. It's the 18th century's extracting sunlight from cucumbers, just rebranded for the digital age. The goofy, futuristic name was everything. The actual business was almost an afterthought.
Yeah, behind all those flashy names, a lot of these companies were just fundamentally broken. Pets.com is the poster child for this. They had that famous sock puppet mascot, but their business model was basically to lose money on every single sale by shipping heavy, low-margin bags of dog food across the country. The mantra back then was get big fast. Get eyeballs now, worry about profits later. The problem was, for most of them, later never actually came.
So we've seen the what, the tulips, the .coms, but now we get to the really interesting part, the why. Why do these bubbles happen over and over and over again? Well, the answer isn't really in finance or tech. It's deep inside our own psychology. This is the big question at the heart of every single bubble. You might see a price going to the moon and think, that's insane. But then you see your neighbors getting rich, you hear the buzz everywhere, and that little voice of doubt starts to creep in. Why is that pull of the crowd is so incredibly powerful?
This classic psychology experiment explains it perfectly. So people were shown a super simple task. Just match the length of a line. Easy, right? But when actors in the room all started giving the same obviously wrong answer, the real test subject would often just go along with them, completely denying what their own eyes were telling them. Now, just replace that line with a stock chart. That's herd mentality in the market. And this herd mentality leads to a really dangerous way of thinking known as the greater fool theory. Even smart investors who knew .com stocks were ridiculously overvalued kept buying them. You ask why? Because they were confident they could sell them to an even greater fool before the music stopped. It's basically a giant game of hot potato, but with billions of dollars.
So after looking at centuries of these booms and busts, what's the big lesson for us today? It's not about finding some magic formula to predict the next bubble. It's something much, much more personal.
The cartoonist Pogo just nailed it with this one. We have met the enemy, and it is us. When it comes to investing, the biggest risks aren't usually in the market. They're in the mirror. It's our own greed, our fear of missing out, our deep-seated need to follow the herd. That's what really gets us into trouble. This is honestly some of the best, most practical financial advice ever given. Are you losing sleep over your portfolio? Are you checking prices all the time with that knot in your stomach? That feeling is your body telling you that you've gone past your own personal risk limit. The real goal isn't just to make every last dollar. It's to build a portfolio that lets you sleep at night. You have to know your sleeping point.
So we've gone from tulips to telegraphs, from railroads to the internet. The technology that powers the story is always new. It's always exciting. But the underlying plot, the one driven by human hope, greed, and fear, it stays exactly the same. So the final question I'll leave you with is this. Knowing what you know now, what do you think the next castle in the air is going to be built on?